I think I'm going to leave the other there, and let's start talking about specific queries. At this rate, I'm thinking we could probably, with the questions I haven't even attended to, we could probably do a 3-hour session and we'd still be going strong. But if you do have something that you desperately need attended to, I think the lesson from this is, as much as I'm trying to talk to the stuff as we get through, please respond to Adele's emails, because then you're definitely going to be in the notes. On the day, I can only get to so much. All right. So, first income tax query received is what happens to individual taxpayers for how they declare CGT events that are not primary residence sales that also have exemptions attached to them. How do you declare them on the IT12? First place I would always recommend to look is to please go and have a look at the comprehensive guide to the IT12. Now, I apologize if I'm preaching to the choir in terms of you knowing that you need to look there, but the benefit of the IT12 is that because the tax return changes every single year. So what was true today won't necessarily, well, no, let's rephrase. It doesn't even change every year. It changes every time SARS updates the form. So you could even have within the space of 6 months that how you declared it 6 months ago versus how you declare it now changes. So the IT12 really, I would honestly go and say, your best friend with respect to checking how on this particular return should I disclose it. So the main thing is, if you're looking at the 2021 returns in terms of chapter 5.4.6, if you've ticked on the tick box with the CGT, and you go and say, tick box, I have a CGT event. I had 3 separate CGT events. One was a primary residence and the other 2 were not. Then what should pop up on the tax return is, for one, it will have primary residence. Is this a primary residence? Yes, no. And then if you tick yes, then you would just take and go and put in the proceeds, you'd put in the base cost, and then it would automatically fill in the primary residence exclusion. If you've ticked no, it should still pull up the exemptions slot for that particular CGT calculation. If it's not, it means there's actually something that's gone wrong on the technology side on your particular return. And if that's the case, please again, escalate to your RCB, escalate to SARS, because there's a technology error with respect to the calculation of the return. As a rule of thumb, if you can show a technology error with your return, that will generally be escalated virtually immediately, because it will be a systemic error that won't just impact you, it will impact everybody else. And the sooner we can get those escalated, the easier it is for everyone. So please don't be shy about escalating to your relevant RCB. They should give you the information in terms of how you escalate that process, and we can then go and get those corrected. Please, 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 if your tax return is not doing what it says in the IT12, it means there's a coding issue. We need to get that escalated as soon as possible. All right, but otherwise, the exemption should be for the 2021 returns and going forward be separately disclosed. If you are doing a 2018 or before return, the exclusion line item wasn't separately split out for non-primary residence amounts, and those you would have to net off in your calculation and keep the supporting documents. All right.